Hello everyone, welcome to the Ichimoku charts.com daily analysis for the Euro US dollar FX for Thursday, February 28th, 2013. Well, a continuation of the trend to the upside today in a candle that's made a higher high and a higher low. Previous day's trading we had a change of trend to the upside. Prior to that we had a doji candle that gave us a very strong hint of a change of trend. And prior to that a very strong downtrend with the market trading within the cloud. That doji candle highlights how important these dojis can be as major reversal areas, and here we've seen the market change trend to the upside with a very solid white body candle for yesterday's trading. Tested to the resistance at 131.45, previous support here over a very short time frame. And for today's trading we've seen the market test up above that level and be rejected in a very strong manner from there, and it does suggest that that is very, very solid resistance now at 131.45. For today's trading we've seen the sellers today match the upside momentum that the buyers had, so a bit of yin and yang here for the previous 2 days trading. Quite some indecision with a strong bullish day for the previous day where the buyers closed with control and showed some commitment. Today almost exactly the opposite amount of bearishness with a strongly bearish control and the sellers showing commitment today. So how this works itself out will be interesting for us to see, but there is a possibility of this market interacting with 130.25, the 130.25 level of support, which is very strong support if this market does trade lower. Remember the trend is up, but the short-term dynamics, the supply and demand, is not really favouring this trend continuing, with the sellers taking such strong control of the market for today's trading. The 130.25 level is extremely strong because it's in the region of the bottom of the cloud, and that makes that a very, very important level. If we do see a breakout down to the downside and a solid bearish close down below, we could quickly see the market testing to 129.68 and then even beyond, and we have major support down around the 128.57 level. To the upside, as I've mentioned, 131.45 is important resistance, and then extending up to 131.96, but all the way through here we have the cloud extending up now to around 132.50, and then a yellow zone of strong resistance extending up to 133. So many areas of solid resistance overhead. But if we look here at the a series of lower peaks and lower troughs in this market, today we may have seen the market make another lower peak, and if we do see a lower high and a lower low, that will confirm that as a peak, and there is then potential for the market to take out this trough in line with the major selling that we've seen in this second time frame downtrend over the previous month or so in this market. Now let's just take a quick look at that head and shoulders pattern that formed recently. We saw the breakout down below the pattern, the retracement back up towards the neckline, and the subsequent sell-off, and the target has pretty much been met. I did suggest when we were trading down around these levels that we should have considered taking profits down around there, and we have seen the market rally, but there is potential for the market to test down to the target at 129.68, but we do have very solid support down below, as I've already mentioned. And looking at this minor uptrend that we've seen the market in for the previous couple of trading days, it did look as though this was forming as a small flag type pattern, and here we have the prior downtrend in the first time frame and in the second time frame, the small pattern that formed quite quickly. They tend to be continuation patterns, so here at the moment, the way this current candle is developing, we have seen a breakout down below the bottom boundary of the potential flag, and we do need to wait until the market closes. We don't have confirmation of any patterns until we see a close below the boundaries. So here we've seen the market open. It is trading now back up within the pattern at the moment, and if we do see a bearish close down below there, that does suggest that there is potential for the market to trade lower. So let's wait and see how that develops. if the market does close higher, however, we will need to look at the boundaries that we've drawn here. Might not fit quite exactly a flag pattern. It might not fit into any pattern here at the moment, but this small area with this minor uptrend that we are seeing at the moment is pretty much a congestion area, and that's what we're looking for with the patterns. So let's wait and see how this current candle develops. In terms of the Fibonacci extension, we're examining the relationship of this current first time frame uptrend that the market's in to the previous time the market's trending up, and here we've seen the market today interact with the 100% level and sell off from there. So that does suggest that there is solid potential for the market to trend lower now and for the trend to change to the downside. And looking at the Fibonacci retracement of the prior downtrend, and here we saw the market testing up roughly to around the 38.2% level. Not quite, almost got there. That was at 131.17, and we traded to around 131.75, and we traded to around 131.62 or so today. But the important thing is that the market has been rejected strongly from around that area and does suggest potential for a change of trend. Now, in terms of Ichimoku, obviously we have a neutral market in big picture terms, with the market trading within the cloud, so no clear trend in a higher time frame at the moment. We want to see the market trading either down below the cloud for a bearish market or above the cloud for a bullish market. But the market is bearish in the medium and fast term time frames by trading below the Kijun-sen, the pink line, and below the Tenkan-sen, the green line. The Kijun-sen here is pointing flat, and we have seen price action attempting to retrace back towards there over the previous couple of days, so we do need to be aware of that whilst that is pointing flat, there is still a possibility of the market trading to higher levels. But with this very solid resistance overhead, there is a very solid boundary at the 131.45 level that will or has potential to stop this market from trading higher. Looking at the Chica span, that is below the corresponding price action, so it's confirming what we're seeing in the faster time frames. It does suggest that there is a possibility of this market breaking out to the downside, so let's watch that. But 130.25, the support down around that level, combined with the fact that that support level is at the base of the cloud, does suggest that it is very, very strong support for this market. If we do see a bearish close down there below there, that will be very significant and will suggest that there is potential for the market to trade to lower levels, initially 129.68 and then even down to around the 128.57 level.